Hello everyone, welcome. This is a presentation about company COV International 9. COV International 9 is one of the largest oil and gas companies in Coventry. The annual production of the company is 300,000 barrels per day. We got the investment decision after we measured and observed these key factors: the value, continuing production, product mix of oil and gas, and diversity of supply. Our company has the choice of assets in 5 countries: Algeria, UK North Sea, Western Canada, Kazakhstan, and Mozambique. For all countries, we consider investment and acquisition, value, production, revenues, and net profit. And we made a recommendation based on analysis. We did the calculation based to these assumptions. 1 month is equal to 30 days. 1 year is equal to 365 days. The annual budget is from 2012 and will be the same for the next 4 years. The budget of the company is limited by the government in 1.3 billion for every year for 5 years. And since we use PCA, then we assume that all costs incurred will be paid back by the government, both by CAPEX and OPEX. And we continue with the presentation about Algeria.
For Algeria, the company, according to what we're given, he discovered three oil fields. And the 3 oil fields are about 280 million barrels. But after the analysis, he discovered that to be viable to invest in the one oil field. So these oil fields, we saw that with an average of an API of 34, which means there's medium crude quality oil. And the one gas field that was discovered is sweet-rich gas, which is mainly comprised of ethane and propane. So the value study that we put in, we say that to be good, we based our value study on initial crude oil production that starts in June of 2012, gas production that starts in September of 2013, and also put in 2 factors that the development phase will take about 5 months. So these are the numbers, the values we came up with. For the total revenues, we saw that the company will be able to make about 4.10 billion, total expenditures of 4.3 billion, and after the 5 years, the discounted profit will be about 247 million. However, the company won't be able to invest since the expenditures outweigh the profit, so it won't be viable for the company to invest. As for the continuing production and product mix of oil gas, we saw that Algeria has several prolific hydrocarbon bases, and the production is forecasted to remain for the next 20 years for the oil reserves and 40 years for the natural gas. So we're going to UK North Sea.
Ladies and gentlemen, as you can see out in the States about the UK North Sea, theoretically it can be justified by state where in 2008 was emphasized the importance of the oil in the world, which is sea oil and gas field. It's one of the most important oil in the field in the world, and also emphasize the political stability of the UK North Sea. They also was allowed, according to the European Union, to do business in the gas market. For this, as you can see, we consider to invest, the company organization consider to invest on the 3 well fields based on the asset. We can see in the second year we invest, we can make a profit of 142.4 billion. As you can see, stated on the illustrated on the table here, you can see the total revenue, which is 2.5, and also the total expenditure, which is 1.4, and the profit after discount is 5 years for 807. As you can see, we continue the total asset here, expenditures of 104 billion for the 5 years, including overall costs. And it is also, however, this organization can also invest for the rest of the project to the other assets. For the 5 years, the company will not produce a gas based on this disadvantage of the limit project.
So, Canada has 20,000 arc of oil sand, which will be upgraded to synthetic crude oil before it is sold. Canada oil and gas industry started a few years ago. Due to the economic growth and the growth of demand, the country has developed a lot of pipelines and has already all the technology resources. The North America oil and gas production is going to increase due to the demand of China and the growth of demand of the American population. Synthetic crude oil, SCO, the upgraded product from bitumen, will be the next target of the company. Coventry Oil International 9 plans to sell SCO rather than bitumen, since SCO has higher quality and value. Since North America is a target market, the company has a climate policy on environmental matters that requires oil sand refineries to produce lower carbon fuel. The table shows that Canadian oil contributes high profits, although it is more investments to upgrade the oil sand. The company, the company has their payback period in the second year, which amounted to 66 million as a profit. So, Canada has 20,000 arc of oil sand with potential reserve reaching 200 million barrels. At the end of 2016, we still have 127 million barrels to be produced with the same facilities. As we do not have any contract for gas production, we will not produce mixed oil and gas. This is the table for diversity product supply, which will be produced by the company. You can see that the most is diesel fuel, gasoline, sorry, 43% diesel fuel, and the rest is other products like fuel industry and aviation fuel. So next is going to Kazakhstan. Thank you.
Kazakhstan is a country that's high potential in the oil and gas industry because they already proved 2.4 billion cubic meters of gas reserves and about 30 billion barrels of oil reserves. However, this country holds fuel refineries, so most crude oil is exported to Russia, and they have developed the pipeline to China as well. This case study, they are for license, and we will show the figures for one license. The revenue we can get for 5 years is about $13 billion, and the expenditure is $7.7 billion. As a result, we would get a profit for 5 years about $3.8 billion. And how about continuity? This field has high possibility to find more additional research. So it means we can have more production in the future. And crude oil in this country is refined to produce heating oil, diesel, gasoline, and also chemical components like ethane and propane. And now let's move to Mozambique.
We're going to the conclusion directly because of the time, and we can see in the conclusion that we don't choose Algeria, Kazakhstan, or Mozambique because the explanation for Algeria, we have profit lower than Western Canada, even though it only the total expenditure is $4.4 billion. Yeah, and about the Kazakhstan, it has total expenditure over than 6.5 billion for 5 years. That's why we don't choose it for the investment portfolio. And for Mozambique, it lost, and also it has the highest expenditure. And we decided to choose UK North Sea and Western Canada as our investment portfolio, amounted 24% for UK North Sea and 76% for Western Canada. And the second recommendation that we would like to give to the management is that the company should consider the profitable projects in the future, such as like the Kazakhstan has the highest profit, but we don't have enough budget to cover the total expenditure. So in the coming project, in the next future project, we're gonna propose the budget to the government for the hire to cover all of the expenditure. That's all. Thank you.
The last slide on, please. Yeah.
The last slide. Wait.
Leave it on. Yeah.
Sorry. Wait. This one. This one. No. This one. Okay.
The conclusion.
This one.
Yeah, that's all right.
Okay.
Okay. Questions. 3 questions.
My question is, I realized from the beginning they said your budget is limited by the government. I thought it's a limited liability company, and therefore your budget should depend on the capital you have. Why should it be limited by government? And secondly, after the Algeria slide, I realized that you are using 1.3 billion per year, and you jump to 1.4 instead of 1.3. Why are you using different figures?
Sorry.
For your budget?
Oh, sorry. For the second question, it's Miss Typo, sorry. And for the first question about the limited budget by the government, actually, as I know that before the oil company going to have the project, usually they should propose the budget to the government. And usually, when the company proposes the budget, it's not all of the expenditure approved by the budget by the government. So usually the government like cutting costs for the budget. Is that what you mean?
Let's make your question as explicit as possible. Okay.
I was asking whether is the company a limited liability company or is a government state-owned company. Well, I think that the company is a limited liability company, which budget not depends on that.
Oh, because we use the PSA. We know the assumption that we depend on the PSA. It's a production sharing agreement with the government.
Yes.
Is that what you want?
So is your company an IOC or a government-based company, like a national? Is it national oil company?
No, it's international, but we have a PSC. We have the PSA. So there is a rule from the agreement, like about the limitation budget and everything.
Okay, you said the other one was a mistake, 1.4, and I hope this answers your question. Next question. Next question. No other question. Steven, have you got any comments?
Yeah, I want to say.
1 minute.
I want to say I was actually impressed with this group in some areas, like especially they itemized their objective at the very first start. And if you look at the conclusion, this is good for executive presentation. So, and that gives me a clear-cut idea of where they said yes. And they went step by step telling me what profit they will make in each group, in each country, and what expenditures they have. I mean, briefly, for me to be able to, because if you're looking at executive presentation, you should assume that the executive might not have time to go through all those tables.
Exactly.
So those are some points they have mentioned. But I also want to say, you spent a lot of time reading the slides. That's not a good presentation style. But, yeah, but it's okay. Well done.
Yeah. I was just wondering, if I was a shrewd businessman and I'm trying to see whether or not I can invest in these, you have your highest profit in Kazakhstan at 3.9 billion US dollars. And you said because you didn't have enough money to run that. I was just wondering, did you think outside the box to maybe suggest to take a loan from the bank or something? Was there any deliberation to that effect within your group?
Because we are limited by the government. Once again, we need to consider the budget approval from the government. Since if we expend more than the budget from the government, then we're gonna get the cost recovery.
That sounds good, but I just thought, as a businessman, I want to make money.
That's why I recommend for the next coming future.
Yes, and I noted that recommendation. I wrote in my book here, good recommendation, because the first group just abandoned Kazakhstan, but they went ahead to tell the government
to consider investing in Kazakhstan, looking at the investment opportunities that are there. Thank you very much.